And US Fed Reserve has raised interest rates for the first time since 2018, and it has laid out an aggressive plan to push borrowing costs to restrictive levels next year. It's a change from battling coronavirus pandemic to countering economic risks, which have been posed by excessive inflation amid the war in Ukraine. While US Central Bank Fed's Open Market Committee (OMC), it kicked off the move to tighten monetary policy with a quarter percentage point increase in the target federal funds rate, lifting the key benchmark from current near zero level. In a step, it will ripple through a variety of other rates charged to consumers and businesses across the world.
The FOMC raised its policy interest rate by 1/4 percentage point. The economy is very strong, and against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate will be appropriate.
But new Fed projections showed policymakers are ready to shift inflation fight into high gear as well.
With appropriate firming in the stance of monetary policy, we expect inflation to return to 2% while the labor market remains strong. That said, inflation is likely to take longer to return to our price stability goal than previously expected.
Now, most policymakers also see federal funds rate rising to a range between 1.75% and 2% by end of this year. It's equivalent of a quarter percentage point rate hike at each of Fed's 6 remaining policy meetings this year. They project it will climb to 2.8% next year. It's above 2.4% level that officials now feel would work to slow economy. Fed Chair Jerome Powell also said economy is strong enough to weather rate hikes and it will maintain its current strong hiring and wage growth. And Fed needed to now focus on limiting impact of price increases on American families. Even with Wednesday's actions, inflation is expected to remain above Fed's 2% target through 2024. And Powell said officials would not shy from raising rates more aggressively if they don't see improvement at all.
We'll be looking at the data as they come in. We'll be looking to see whether the data show expected improvement on inflation. We'll be looking at the inflation outlook and making a judgment. And we'll be going, each meeting is a live meeting. And if we conclude that it would be appropriate to raise interest rates more quickly, then we'll do so.
WION now available in your country. Download the app and get all the news on the move.